All right, folks, going to take a look at Chapter 4 from our fraud textbook. All right, this is going to be about cash receipt schemes and other asset misappropriations. All right, so let's take a look. Okay, so the first one, Module 1, is going to be about skimming. Okay, that's where, the fraudster absconds with cash. As it enters the business, but before it's entered into the books. That's what skimming is. Okay. Then we're going to take a look accounts receivable with skimming, how people do that. Cash larceny. This is basically, well, it's a form of stealing, but they're not really worried about hiding it so much. Non-cash asset misappropriation. This is where you're taking inventory, things like this. Then going to take a little bit more of a look at inventory issues. And then fraudulent documentation. How do they use that to conceal misappropriation of assets? Okay, so a lot of people doing fraudulent things here. We're going to take a look at some of that. Okay. All right, so the first one, skimming schemes. Okay, theft of cash. Okay, prior to the entry into the accounting system. So this is what's called off-the-book fraud. So this is not like fraudulent, when things were in the books, but fraud being them misplacing it in the books. Okay, it's not actually in the books itself. So notice there's no direct audit trail. Okay, and this can occur at any point where funds, any kind of money, checks, whatever it is, enters the system. So salespeople, tellers, wait staff, anybody who gets cash directly from customers or checks for that matter. Okay, and they could either target the sales or the receivables. Receivables is where they'd be dealing with the checks. Okay. All right, so here's an example of what somebody would do. So the fraud perpetrator, okay, they go and they file documents with the Secretary of State for OSI LLC. So this is an abbreviation from an actual company, Office Supplies Inc. They can go get a federal tax ID number, then they can open a bank account. When checks arrive made out to Office Supplies Inc., the legitimate company, the perpetrator, the fraud, deposited into this bank account. Okay? All right, so notice it's not uncommon for companies such as Office Supplies Incorporated to have a corporate identity with a different name. Okay? So sometimes, in other words, the operational name versus the corporate name could be two different things. So the perpetrator manages the accounts receivable from Office Supply, and they hide the missing checks. Okay, so that's just an example of what could happen. Okay, here, let's take a look. Let me try to make this bigger for you so you can see it. Okay, so employee pockets the proceeds of the sale. Okay, so here's different ways they could do it. No ring register on the sale. They can manipulate the register tape, destroy the store copy of the receipt, depending. No receipt is issued. Sales during non-business hours. So you can see this is a way to pocket the money directly. Now, what if it's currency, you go down this line, and if it's a check, you go down this way. Is the payment made by check or currency? The employee converts the stolen check. Well, how do you do that? You could take it to a check cashing place. You can endorse the check, right? If payable to individual, forge the endorsement. Like we just looked, open an account, similar name, alter the check, swap the check for an equal amount of currency. Now, what if it was by currency? We go down here to the bottom. Destroy the transactions, lap the receipts. We'll talk about lapping in just a little bit. False statements from company, pad inventory, fabricate records. So there's all different types of things here you could take a look at. But I just want to show you. So what happens is the folks doing this, they come up with ways in their mind. How would you do it? And by the way, like they mentioned before, one of the best ways to catch a fraudulent person is to think like one. What would you do to hide this? Okay. All right, now let's go back here and make this smaller now. Okay, so sales skimming, we talked about. Most basic skimming occurs when employee makes a sale, collects the customer's payment, but makes no record of the transaction. Okay, so basically they just collect the money. Okay, and how do they do it? Cash register, after-hour sales, off-site employees do it, port collection. These are just different ways that it happens. Okay, so Again, typically, and if you want to know what prevents this from happening, it's strong internal controls. Okay, that's the reality. It's strong internal controls. Okay, all right. This is still too big here. Okay, all right. So cash register manipulation, let's look at that first. Okay, most difficult parts of skimming at the cash register is the overt act of taking the money, the actual taking of the money. Nowadays, if you walk into Walmart, Kmart, any of the, not Kmart anymore, Walmart, Target, they got those cameras above the cash register. Your employee might ring a no sale, okay, because they got to get that cash register open, okay. In other cases, sometimes employees rig the cash registers so sales are not printed on the register tapes. Notice, with modern cash registers, this is difficult to do. By the way, with older traditional cash registers, it's a little bit easier. So this is one way to do it. That's cash register manipulation. After hour sales, exactly what it sounds like. We skim unrecorded sales during non-business hours. So they create not only a cash shortage, but an inventory shortage as well. Okay. And then they got to hide that inventory shrinkage. Shrinkage is what happens when the inventory is stolen or otherwise lost. Okay, and again, there's all kinds of documentation they can do to hide that. So after hours, that's another way to do it. Okay, they do it basically when the business is not open. Okay, what about by off-site employees? Okay, remote locations without close supervision. Okay, why? I mean, the people are there. There's nobody supervising them. Okay, so here you go. Best examples of this type of fraud, apartment rental industry. How do they know if the apartment's rented or not? Apartment managers handle the day-to-day operations without much oversight. They could be collecting rent that the company doesn't even know the unit is rented. Okay. Property manager in one case skimmed payments made by tenants for application fees and for late fees. Okay. Again, parking lot revenue collection. Okay. Or an independent salesperson. These are all areas where there's not a lot of supervision, and when there's not a lot of supervision, there's always a great opportunity for fraud to occur. Okay. Poor collection procedures. Okay. Poor collection and recording makes it easy to skim. Failing to itemize daily receipts is a common problem. So what they're getting at here is if you're not diligent with your record keeping, if you don't have, for example, 2 people checking, there's no separation of duties. This is a big problem. Okay. So let me open this up here, make it big again. Okay. So here it says employee understates the amount of the sale. They can enter a lower price in the register. They can make 2 separate copies. They improperly record the receivable on the book. Record discounts not actually given to customers. Now, if it's made by check, we go down this way, currency this way. So if it's made by check, again, they swap that check for cash. The employee skims part of the customer's payment. They conceal the theft, and they can destroy the transaction. They can intercept the customer statement, lap with receipts, false discount, pad the inventory, make fake new records. Okay. By the way, now it's really easy to copy things these days, right? Before we didn't have copy machines like we do now, okay? And if it's currency, it's done by this method. Follow this line down here. Here, if it's a check, they just swap it for cash. Then down here, again, they fake the inventory. They false credits to inventory. They write off missing assets. They change assets to existing accounts receivable. Again, manipulating the books to hide what they've done. Okay? Well, make this smaller again. Check for currency substitutions, right? So another way skimming occurs, you take unrecorded checks that the perpetrator stolen and substitute them for currency. Okay? And it says here, this type of scheme is especially common when fraudster has access to incoming funds from an unusual source. By the way, I've actually seen that one happen in an auto repair shop. Okay. When I come back, I'm at the end of this one. When I come back, I'll tell you a quick story about it. All right, folks, that's part 1 from chapter 4. We'll be back with part 2 in just a minute.